Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me is Jeff Kilburg, CEO of KKM Financial. And Jeff, it's been some time. We need to get an update on those model portfolios.
It has, Jill, and as you know, we run a lot of ETF model portfolios powered by Nasdaq Dorsey, right? And they've been active and dynamic. I think that's what worked in 2020, Jill. We talk about being active, we talk about being dynamic, and I do have a portfolio update for you on the sector rotation. We did see IGN, that's the North American Tech ETF, go into the portfolio. So now that model portfolio has 10 holdings. Talk about diversification, still tilted towards technology, but nonetheless, 10 different holdings represent 10% of this model portfolio. It outperformed its benchmark in 2020. And the way it's positioned right now, despite the volatility, it is providing diversification for advisors.
And that was my next question. How are advisors using these within their practice? Because 2021 seems to be following the theme of 2020, where we're seeing some significant volatility in the market.
Well, we work with a variety of advisors and family offices. And one of the things that these ETF model portfolios can really assist them in their practice. It can help them simplify, it can help them scale. But more importantly, inside this volatility, this model portfolio or a model portfolio they choose allows them to have a consistent, repeatable investment process. And that's so important for compliance, but it's also so important to scale their practices. So by having these models nailed down, it allows them to navigate these markets. And we're obviously slightly biased towards the active and dynamic component, utilizing relative strength, which is powered by Nasdaq Dorsey, right? But these advisors are really embracing model portfolios for all those reasons I just listed. But the fact that they can consistently have a process and repeat that investable process, that's the secret sauce, Joe.
So Jeff, how often are these rebalanced?
Great question. Certainly contingent upon volatility. The iShare models powered by Nasdaq Dorsey, right, that we manage on a variety of different platforms are screened weekly, Joe, but they don't trade weekly, of course. But when you see the volatility like we did in 2020, our tactical rotation model traded 11 times. Now, of course, in 2019, it didn't trade as much because it was a different volatility regime, but nonetheless, they're active and dynamic, and it's all about market conditions. And that's where we can be a value add to advisors, not just us in these specific models, but also having a model portfolio that has some type of active and dynamic to help them with those client conversations that they actually did something in the month of March when we saw that acute volatility hit due to the pandemic.
All right, Jeff, appreciate the insight. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, global markets reporter at Nasdaq.